presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
Doing great. You having a good day out there?
I am having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. This quote is by Marlo Giordano. Be strong. Go with your heart and believe in miracles, because anything can and will happen. Market-wise, let's take a look at it out here. We get the Dow Industrials down 62, NASDAQ off 22, S&Ps are off 6, gold contract up $2.30, trading at $1,112 an ounce, silver flat at $16.59, platinum up 11 bucks at $1,186 an ounce, copper flat at $2.70 a pound, light sweet crude up, let's see, $1.22, trading out of $49.39 a barrel. Bonds, we have the 10-year up 4 ticks, 128.13, 30-year up 4 at 146.30. In both cases, folks, they rejected lower price, had lighter volume. Bottom line, 10 and 30-year want to go higher. King dollar is the one to watch coming into the closeout here today, folks. You're at 95.33. Bottom line, the number is 95.35. Close over that, and that will go off to the highs. You close under that, that's going to be a weekly failure. Euro is flat at 111.89, and the yen is up 25, trading at 119.67. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, let's go over to the world of the SPY and see what's happening. So, you have window dressing happening out here first off, right? Window dressing in itself, folks, okay? Last 2 days of the month, following 2 days of the new month. Most times, markets can stay at high, they can stay flat. Let's put it this way. In this case here, I suspect what you're going to see two different things. Market is really flat today. We got it down 65. NASDAQ is down 22. So the NASDAQ's taken, they're all flat. I mean, that's the reality, because NASDAQ's down 0.4%. You get the Dow down 0.3. S&Ps are off 0.2. What I expect two different things. As many of the tigers in the den are saying, each and every day when we come down like this, 330, bottom line, that's when you get the little jolt on the way back up. They flatten out the markets. Yesterday, we actually taken a look at the market yesterday. The market was absolutely flat from open to close, and they got the range going. What are we going to do out here today? Okay, first off, let's go over and we're going to take a look first at the E-mini. So I want to show you something here. This E-mini is building cause to move and break the lows into this close. It's going to be really intriguing. Watch this shake out. And this is what you have. You had 3 separate spike lows in the last 3 days. Those spike lows are at the 2102 area. We just did the first spike down, and it got right to the exact same place. So absolutely, you can turn around and say, hey, listen, man, this thing's going to bounce out of there the same way. And you know what? Guess what? If this wasn't a Friday coming into the weekend after window dressing is all said and done, I'd go for that. Technically, it's set up for a little bit of cause right here, and I expect even before, what do we got? We got 10 past 3 Eastern Time. This is going to happen in the next 10 minutes. This is why. So what happens is that when you get and on Wednesday, folks, this is where I'm coming from, because on Wednesday what we had is this. Wednesday, the contraction at the highs was dramatic in volume. When you get that, and then you just slide and roll over slightly. And we're coming into the weekend, and you're coming into window dressing. Any and all large money movers know that they got everything tied in. They want it tied in, but you know what they also know? They know they got to get out the door before everyone else gets out the door. So what I expect you're going to get, now here, this part here is a fundamental deal. What you're going to see is you're going to see a couple larger operators want to get out the door before the first. They'll give up the first, second, and third of next week if, in fact, window dressing can keep it moving to the top side. So this is going to be an intriguing close coming into it, because what I expect you're going to have is this. The S&Ps right now are 2103. The break, if this break comes in correctly, that S&Ps can get down to about 2192. Because this break, let me just pull this back. The break would be substantial in the aspect there's not much. Yeah, it would be. That's what it is. Because, see, the same range we've been at, we've been at the same range. The same range that we've been at is actually all week long. You know, so once you broke that range, there's nothing to stop this thing. I'm saying, you know, you come down to the, it'll be 2090, but the reality is that what's wide open down here is 2082. I think that'd be pretty tough to get to in the course of 50 minutes. But bottom line, I expect you're going to see more selling coming into that, and it will be fast. 877-927-6648. Give us a call, folks. Now, let's go take a look at some of the high-volume stocks in this low-volume market out here. This is what you have happening. We have Apple down $1.60. Bank of America's off 23. You got Facebook down 171. Weight Watchers looks like it's going out of business. Bottom line, it's broken all lows going all the way back as far as it's traded. Down $6. That's trading at $11.51. Bottom line, the Weight Watchers are saying, hey, guess what? They don't need Weight Watchers anymore. But that is a smoking in an extraordinary way. There's no two ways about that. We go take a look at the gold contract. Let's take a look at gold, what gold is doing. Now, for the dollar going to highs, gold has really held up well. I mean, big time, too. Gold right now is trading at 12.13. We have done 103,000 contracts. Yesterday, you had some juice behind the move. And, you know, if gold hangs right where it's at right now, that'd be really awesome, because gold closed out the day yesterday at 12.10. We're 12.13. That's huge, but you're still outside the downtrend. That's the real key here, is staying outside that downtrend. What we didn't do is this, and this is what we want to see. When you break a downtrend or an uptrend, you want to break it with wide price spread accelerated volume. Gold didn't do that. You know, we broke it, okay? But what you want to see for conviction is that wide price spread accelerated volume. We go up and we take a look at the silver contract. Silver is flat right now. It's actually down 2 pennies. Silver, however, looks actually stronger than gold right now, and this is what you have with silver. The silver contract actually broke it with conviction. It broke the downtrend, went with conviction. Now what it's doing is pulling back with lighter volume. So that's a sweet setup, because what we had is this. On Wednesday, we did 40,000 contracts. Thursday, we did 42,000. Today, you're pulling back with 26. That can set up a little small ABC structure up. That can get you into the 1743 area. The downtrend that we broke in silver is saying silver wants to run into this 1850 area. Bonds. Now, the bond market, folks, is the name of the game. Bonds and the dollar are basically something that you absolutely have to keep your eye on. Why? Because what we have is this. Bonds are also doing a small ABC structure on the way up, and this is going to be a trip. This is actually bonds continue to blow people's minds, but let me tell you something. This one was really going to put a twist on it. Why? Because we're going to head right back to the highs again. And this is with the Fed saying, hey, we're going up in rates. And the market saying, you can go up in rates all you want. We're not going up in rates. We're going down on rates. The 10 years at 128.15. It's going to run to 131.15. We'll see whether it takes it out. 30-year. What do we have with the 30-year? Same setup in the 30-year. ABC structure on the way up. 30-year today got down to 106.07. Rejected it. Went higher yesterday. Has the juice behind the move. Bottom line, you're outside the downtrend range. The 30 years at 147, 151.28 is game. And what does that set up? That sets up next week, folks. We're going to see some of this coming into the close today. But I suspect next week you're going to see this turn. Instead of window dressing, we're going to have window smashing on Monday, Tuesday, and Wednesday. Some of the Dow stocks out here, you have Marvell is flat. You got American Express down $1.49. JP Morgan is down 17 cents. Inside the Dow Industrials, which is putting juice into it versus taking out of it. We're putting Coca-Cola is up right now 98 cents. GE is up 17. That dead dog IBM is up 53, and United Health is up 30. Taken away from it, American Express is down $1.49. Cisco's off 50 cents. Intel's down 36, and Caterpillar's off 85. You stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow down 64 right now. Nasdaq's up 21. S&Ps are up 5.5. And bottom line is that as we come into this close, we'll see if, in fact, we get some kind of selling with some juice. Thus far, what we have out here on the weekly basis, folks, is that each and every ETF structure has dramatically lighter volume at the highs. So the real key is going to be, will you have a slight price failure at the highs? And what that is that on a weekly basis, you had got over the highs, you closed underneath them, you have lighter volume. You know, the last 3 weeks we've closed each and every time slightly higher. That's how this thing has been shaken out. We take a look at the issues. Okay, so we take a look at the big blue out here, IBM. IBM, folks, bottom line has been, there's a monster seller at 165. 165, this thing just keeps getting sold off. You're building some more cars right here. I suspect what you're going to see is you're going to get into this 150. The reason I just brought up IBM, by the way, is that even though IBM is up 50 cents, IBM today is the fourth leader this is, inside the Dow Industrials. So what that is saying, okay, when you have a stock that's, particularly IBM, a stock that's only up 50 cents, and that has to be the fourth largest leader, what is that saying? That's saying that the rest of those stocks are dead. I mean, dead in the water in an extreme way, too. King Dollar. King Dollar is going to be the number coming into this close. We'll see whether it can do it. What is impressive is that with King Dollar being up so dramatically, the gold market and the silver market didn't get whacked. That's basically impressive in a huge way. Why? Particularly on a Friday, folks, because what you do have happening on a Friday is this. Bottom line, on a Friday, they can smoke gold in an extraordinary way, not in a small way. They can absolutely just take it to the cleaners, lock, stock, and barrel. We get over and we take a look at let's go take a look at the financials, the XLF. What do we have with the XLF out here? XLF small roll. The XLF, by the way, is only one of the only ETF structures that have not got to the highs. And, of course, that's all the financials. You know, we'll see whether you can press it on up to this 25.14. Thus far, you're trading out that 24.37. The XLE energy, we take a look at the energy market. Energy market is building more cars once again to get into those lows. This is going to be a trip watching the energy market. The reason being is that on the daily, it really doesn't look that bad. On the daily, you get a decent consolidation that's taking place. Once you whip this baby into a weekly, it's like, man, this is you have the roll. You come off the bottom of 71.70. You move up to 82. And mind you, that, you know, so 71 to 82 seems like a big move, but it's not, because we came down from 101. So it went straight down from 101. Now what you've done is that on the weekly basis, we close right here. You're closing at the lows of the week. You close at the lows of the week. You're inside the bar from February 6th. What that lines up is that, guess what? It will go test this 75.39 area. That 79.539 area is the high of the low of the week of January 16th. If you do happen to be in New York City and Manhattan this weekend, Sunday and Monday, you got the Traders Expo. That's going to be at the Marriott Marquis. That starts around noontime on Sunday, and it goes Sunday night, folks. J.J. Kenhan from TD Ameritrade, Think or Swim, is going to be doing an outstanding workshop. 7:15. It's free. 7:15 to 9:15. So check it out, and of course, all day Monday you can be out there. XAU, HUI. What do we have with the gold and silver stocks? XAU out here is trading out at a price point of 76.87, and the last high is this 83. What is really cool is that I definitely wanted to see more conviction. But what we do have, even on the weekly basis, is that you have a weekly break of the channel line. That's saying that the XAU wants to run back to this high of 83.22. And right now we're at 76. We go to the HUI. We take a look at that same correlation inside the HUI. That also has broken its downtrend. HUI is at 192.10. That wants to run back to the 209 area. And in both cases, and this is really cool, in both cases it looks like they are going to be closing inside their larger range. Now, that's bullish. The real kicker is going to be this. Is this an ABC up? Thus far, what we've had is this. You've had a rise in volume. Your first leg up from December 18th going up to January 21st had volume on the way up. We pull back with lighter volume. The amount of pullback inside the XAU and the HUI was minimal, and it's about as cool as you can get, okay? You had a 50% retracement. 50% retracement sets up that, hey, guess what? You can get up to the B point if, in fact, it's an ABC structure on the way up. You can break the B point. The B point on the HUI had 30 million shares. So that's substantial, but it can be broken, and it can be broken in a heartbeat. We look at the XAU, see that's how that's set up on the XAU. When you're taking a look at the XAU, whoops, close that one. We take a look at the XAU, the core. How do I keep doing that? There she is. And the XAU, the correlation there is that we're looking for 47 million shares, and in both cases, so the 47 million, I forgot what the last one was in the HUI, but that's going to be about double the volume that we've been trading the last few days. That's what it's going to need. But those B points, bottom line, you build cause up to that B point. We'll see whether they can get enough juice as we build cause to basically get up and over that level. Let's go take a look at Weight Watchers. You want to see something, WTW. There's something, it looks like the stock's going to be out of business, which is pretty amazing, actually, because let me just see something. Let me just see what they take in. I have to see this. So their gross revenues, boy, their gross revenue, oh man, you talk about gross revenues going down. So all this technology gadgets that we can put on ourselves evidently will help. Either that or people are just deciding to eat healthier food. From 2011 to now, their gross revenue has gone from 503 million to 300 million per quarter. So it's pretty intense. That's really intense, actually. Things getting cut in half. When we take a look at the stock, we pull the stock up, and you'll see some destruction on this baby. No matter how far I pull this back, I can pull this back 25 years. It's broken everything, everything. And if you want to see, there's a volume, breaks down on volume, breaks the swing point of 2009, bring it back 30 years. Yeah, it's broken everything. There's nothing here. There's nothing here. And when there's nothing, when you break a level with nothing below it, folks, do not get into it. You know, it means that the probability that it can go out of business goes up dramatically. Does it have to? No. But the probability goes up dramatically. Dow Industrials right now down 56. You get the NASDAQ down 18. S&Ps are up down 4.5. And here we go. So this is it, folks. You're approaching 330. As I said at the beginning of the show, as the Tiger said, 330, that's when the buying comes in. We'll see whether they can bring it up flat or, in fact, going to bring it down to this 2090 level. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And, the jabbering about when these rates are going to go up, you get all the Fed presidents and vice chairmen out there today. There's a big deal in New York. First, you had Federal Reserve Vice Chairman Stanley Fischer say that it looks that the central bank would most likely raise interest rates in June or September, although this is his quote, although economic developments might warrant different timing for liftoff. I don't think that there is an emphasis I don't think there's an emphasis on June instead of September, Fisher told the Monetary Policy Forum in New York. He added that, judged by the view of the Fed officials and investors, it seems that those 2 months are the main weight of the probability. The thing that's amazing about that is not the market's main weight of the probability, folks. Inside the minutes that came out and inside of what Janet Yellen testified at Congress, she testified that she doesn't see it going up in March or April. That's the first one. Now, Dudley came out. Dudley is the president of the New York Fed, and you want to basically take the New York Fed more serious than anyone, because the New York Fed runs the deal. I mean, outside of Fisher's powerful, no doubt. Yellen is the most powerful, but Dudley's powerful. Dudley came out and said, there's a paper that was just published, and what the paper is about, folks, is this. The paper is about that if the Fed goes up on interest rates too early, that it can basically crush any growth that's happening right now, because of the fear that got induced in the financial crash, that fear is lingering. What Dudley's take on it is this, and this is important to really wrap your head around. What Dudley's take on it is that the fear is still there, and he didn't say that he'd rather err on the side of going later. What he did say specifically is that until the expectation of your expectation, my expectation, that inflation is going to get over 2%, he sees that there's not a large risk in order to keep rates at a lower rate. This expectation of inflation is a huge deal, folks, because we've been trained, like the Pavlov dog theory, that inflation is like not going to be around the corner. And the reason I'm saying that, it would seem that the amount of money that got put out, 3 or 4 years ago, I was expecting inflation any time. It's like, oh man, not that heavy, but inflation. Well, it's deflation that has been happening. It's deflation in the stuff you don't need. Food, good food costs more money. No two ways about it. In that CPI number that came out yesterday, what you had is that, yeah, fuel went down, but guess what? If you want to live, rents went up dramatically, not in a small way either. So that CPI is always intriguing in the aspect of what goods and services you use inside of that. That all being said and done, the way this the way I'm looking at this, June's not going to happen either. There's not a meeting in May. Yeah, you have a March meeting, you have an April meeting. There's no meeting in May. You do have a June meeting, and I suspect that the way the market is going to be reacting coming into that summer, they're going to be running, not basically paddling. They're going to be running away from rate increases. When you look around the world, it's still the same deal. It's like the rates around the world right now. If we look at Spain is 1.2, and right now we're at 1.9. We're almost at 2%. Portugal's at 1.8. We know Portugal and Spain don't have any money. They don't have. It's all of the above. Anyway, you get the gist of it. So this rate structure is going to be pretty wild watching this whole thing shake out. And coming into this closeout here, we'll see where the good old S&P shakes out. But let's go look at it right now, because what we do have is that you get 20 minutes coming into the close. And what we're doing right now is that we're pressing those lows. So how we press these lows is going to get really, here, let's do this quick, because this always intrigues me. You get large operators, they're pressing lows, they're seeing there are more orders down there, they want to go home. They want to go home, and they basically want to, in this case, what you have here, whoever this operator is, they want to take this low out. The low of the day is 2102.25. They're sitting there saying, you know what, I want to take that out. And the reason they're saying they want to take it out, number one, is that they want to get rid of some positions. That's the first part. The second part of that is that it's really easy to take it out. There's 20 minutes left. What are you going to do? Whack! You want to whack it down. Boom! See you later. And there it goes. It's gone. Okay? You get the first whack down. They just banged into another low. You get the volume expanding. How many minutes we got? This is a trip, folks. This is on the next 10 minutes. When you're in the next 10 minute and you just start at the lows, they'll get some juice going. So we'll see if you'll have someone else pile on. There's the second pile on. There she is. Oh man, what a sick business! I'm telling you, this is a sick business. There's no doubt about it. Anyway, we'll see where this comes out into the close. Right now, we get the Dow down 75, Nasdaq's off 25, S&Ps are down 750, and the bulls they're fighting. They're fighting here at the 2102. Hey, we'll see where this shakes out. They've managed to fight at 3:30 in the afternoon and get it back up. We'll see how this closes in. But this has all the makings of a slow turn in the marketplace. Fast acceleration. There's not going to be enough room to get out the doors coming into next week. That's how this thing is shaking out right now. Bonds have already rejected lower price. They have lighter volume. They're doing an ABC structure on the way up, and the King Dollar is hanging tough in there. Some of the larger volume stocks in this low volume market. Facebook has already been to the moon. That's pulling back $1.65. You get Apple down 170. No big deal there. Hewlett Packard, that's a stock that has got smoked. That's down an additional 175. And the Dow stocks inside them. Yeah, actually, let's go look at what has been getting whacked. And they're doing a counter trend bounce out here today. The commercial realty stocks. You have SPG up 374. So how is that going to finish in a week? Let me just see this. Yeah, what's going to happen with these babies is that they're actually going to have a higher. They're going to have a lower, higher volume low. That's how those things are going to be shaken out at the on a weekly basis. The dollar is still the king as to where this is going to go. It looks like at this particular point, it's teetering right at this high. The high that we're talking about is the 25 high, and it looks like it's going to close over it. So if that's what we get, bottom line is that we'll have the dollar go test the highs next week. We're only 50 ticks away from it, 500 ticks away from it actually, but it's 95.85. Hasn't hit it yet, but that's where that baby does want to go and get into it. The small caps. Let's take a look at the small caps. Small caps all week. Small caps still hanging at the high. Small caps are at 122.87. And what we do have with those small caps, if we put those on a weekly basis, if it closed up here, you'd be closing another high. That's the bottom line. You're at 122. Small caps would have to close under the 122.54. Right now, you're above it. We take a look at the 3Qs. Where they stand, 3Qs right now are trading at the 108.29, and 3Qs, oh, this is weird, 108.47. That'll be a failure on the 3Qs. These highs that have been generated out here, if in fact on the ETF structures we get failures coming into this close, they're going to be very subtle. They're subtle, they're small, but guess what? You have contractions of volume of about 20% on a weekly basis. That's not bad. What you'd be looking for is that you'd be looking for follow-through coming into next week. Apple. What do we have with Apple out here? Bottom line is that Apple trying to get over its highs of yesterday. Couldn't handle it. Not enough volume behind that move. That's saying that that little baby wants lower price, and I expect that's exactly what it's going to get. Walmart. What do we have with Walmart? Walmart is building cars for lower price. Walmart came off that high of 90. You're at 83. That's not the end of the world, but what Walmart does have is that high volume swing low going all the way back to the 20th of February. What you want to be keeping, you want a little homework over the weekend, folks. This is what you want to do. Look at your portfolio. Look at the equities that have a high volume low on October 15th. Absolutely put a stop in and don't let it get down to those levels. And as you're doing that, pull up a lot of different other stocks that you might like and see if, in fact, they hit the October 15th swing low. Many of them have already hit it, and that's a long way down, folks. This is Tom O'Brien. This is TFNN. 877-927-6648. Dow's off 70, Nasdaq's off 25, S&P's off 6.5. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow right now is down 65. Nasdaq's off 23. S&Ps are off 6.5. And coming into this close, volume-wise, what you're going to see out here, we're going to get about 600 million in NYSE, and on the Nasdaq, we're going to run about 1.7 billion. When we take a look at the Qs, the diamonds, the SPYs, inside the Qs, what you're going to see on a weekly basis is this: the Qs doing about 98 million shares. That's on a weekly basis, folks, okay, which is just insane. You know, that we go down in 420 million shares, and you're at 90 million on the way up. Bottom line, it says quite a bit. And in fact, let me just see something. I got to see this for a second, because if I put this on, if I put this on a daily, on dailies, there's been downdraft days with 65, 75, 100 million shares. Actually, you got to see this. Check this out. Let me put this up for you. If we go over to the 3 Qs, this is pretty wild. So on the weekly basis, what we've done is 93 million. Let's say it's going to be 95 million, whatever that's going to be. When you go to the October 15th swing low, we did 108 million on the daily basis. That's how bizarre it is, folks. Okay, so check that out. That's how bizarre it is. That type of market, you're going down there. We're going to go down and test that area. It's just a matter of when are we going to test that area. And many of the equities have already got into that area. Some of them have already not only just got into the area, they've busted through the area into lower lows. The SPY, what are we doing with the SPY? The SPY is going to do about 370 million. And when you're talking 370, of course, that's the same type of setup, zero volume at highs. That correlation, if we bring that correlation, what did I just say, 70 million? No, it couldn't have been 70 million. No, 370 million. There it is. And October 15th swing low, guess what? We did 380 million. So it's pretty intense. It's the aspect of distribution in spades. People are walking in the store, no one's in the store, give them the stock, buying highs, selling lows. That's the name of this game. And, you know, we'll see where this shakes out the next few months. But the way that it's certainly set up right now, that's the way it is. Let's go to Brent in Martinez, California. Hey, Brent, what's going on?
Hey, Tom, how are you?
I'm doing great, man. You having a good day out there?
It's going well, yes.
Cool, man. So,
calling about Amazon, I shorted or started to take a short position yesterday when it put in that high at, you know, around 389 roughly, whatever it was.
yeah, and look at that. You're talking about a low volume high. Holy cow. Okay, so we're at 379, and you know, just what's cool about this is that this can go to 359 and have nothing wrong with it. Do you know what I'm saying? So that's a nice little setup, man.
That'd be nice for me. I have the 385 put, so I hope it does that.
Yeah, I mean, that's sticking out like a sore thumb. And what happens, Amazon folks, okay, had a heck of a day when it came out with numbers. And it closed at 311. It opened the following day at 354 and went to 359. After that, all the volume died in the vine. So your first retracement, even if it wants to go higher, it loves to come down right to the top of that 359.50. And, you know, you have it going with you right now. That's on the daily. On the weekly, wait till you see this on the weekly. On the weekly, it's absolutely beautiful, man. On the weekly, what you have is that we had come down on 37 million shares. We then even if I use the second one, see if I use the first get-go on the way down off that high on a weekly at 37 million, if I don't even use that, if I just use your swing point, which had 17 million, which it's going to fail on right now, we have done 12 million. So you got a failure out here at 383.11. That was from March 14th, that week of March 14th. You get a failure on price and volume there, so that sets up, at least it sets up to 359, which is all you need, man.
Yeah, it's interesting that there's some technical indicators that I use. As it was reaching that high, they were actually weakening, so that's why I was between that and price line. I chose that just because the technical indicators for me seemed to suggest that was the better
Nice.
candidate to go with.
Yeah. And, what is always nice is this, is that correlation and where you're going for, it can want to go higher, but that's just a natural retracement at this point in a stock that just went $100 higher nonstop. You know what I mean? So that's if you can get it both ways, meaning that we think it wants to go lower, but when you have an aspect that you have the volume is lower, and then you've had an expansion of price as dramatic as you had, that it could be a natural retracement and then still want to go higher. That's a nice setup, man. That's what it really comes down. And, of course, if the market cooperates with you, the way Amazon trades, that can be there in a day.
Exactly. Well, have yourself a great weekend.
Have a great weekend, a safe weekend, no doubt.
All right, take care.
And stay warm out here, folks. We're taking a plane up to New York. We're gonna be there for the weekend for the Traders Expo, and I can't believe it's gonna be 32 degrees in New York. I mean, it's coming into March 1st. This is like insanity. I think it's the first time that I've worn my overcoat in probably, who knows, 10, 15 years. I took it out last night, and guess what? It was still okay. I like it. Pretty crazy, though, I'm telling you, man. Oh, my God. You talk about sick, no doubt. Let's go over and take a look at this S&P coming into the close, see what they're going to do with this baby. So the real question is, who wants to go home with stock over the weekend? That's what it really comes down to. And it's not just over the weekend. It's coming into the end of the month, the end of the quarter, the whole bottom line. Oh, my God. That's so funny. That's a heat wave. 32 is a heat wave. Oh, man. Let's go to Bill in Colorado. Hey, Bill, what's going on?
Hello.
How are you?
Pretty good.
Good.
I have a quick question.
Yes.
You were talking about the October lows.
Yes.
And I wonder, since those inverse and the direction shares reset every day,
Yes.
do you think they're going to make their highs?
No, they don't have to. That's good you just said that. No, they do not have to. Yep.
Okay. How much of it do you think they'll go?
Okay, let me pull up SPXS. I'll pull up want me to do that one?
That's good.
Okay, so what he's asking, this is a great question, by the way, folks, is that the October 15th swing points, okay, will they get hit? The way that's set up on a volume basis, yeah, it will get hit, okay? But you can't, the correlation, the reason I answer this so quickly, the correlation is not direct, Bill. It's not. But you can aim for them. Listen, I will answer that more in the next hour, too, okay?
Okay, and I wonder, too, if there's...
We're going to be right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Robert in New Jersey. Hey, Robert, what's going on?
Hey, Tom. A great show.
Thank you so much.
For years. You got a great thing. I've been listening to you for over a decade. That's amazing. You've done a great job.
I appreciate it, man. Appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. Got my technology expert of TFNN beside us here. I'm Mr. Dave White, and I do want to bummer. Mr. Spock died. Well, I know you loved him.
I liked him. Met him a couple times.
Really?
Yeah.
Wow.
He owned almost all the property down there around where they filmed the Tonight Show when Johnny Carson had it out there. You don't know it, but the guy was an incredible investor. He figured he'd never have any more roles after Spock.
Okay.
But he was in Mission Impossible, a bunch of other stuff.
Yeah.
And he had some decent money, so he went to buying everything he could in property. Mostly around the video production area.
Was this out in L.A.?
Yes.
Oh, that's so cool.
And so I would go in and call on people, and they all the buildings were owned. I can't remember the name of his investment company, but he bought up everything down there. He must have owned 75% of Burbank.
That's a great story.
And the last I saw a thing on him, he'd made a lot of money. He was making about $15 million a piece on the Star Trek movies when they came out late in the 70s.
Okay.
He continued to buy everything. He spent all his money back in that. And then he made about $10 or $15 million on doing 3.5 Men. I don't know if you remember that movie.
I know the movie.
He was the director of that movie.
Okay.
He directed a bunch of other ones, and you never really heard much about him.
That's great.
But he was a very good director, made some good movies. But he took all that money, kept pouring it back in. Last I heard, he was worth somewhere around $500 to $750 million, and all of that was taken as movie profits and just buying more and more property in Burbank.
Gotta love it, man. Unreal. This is a quote by Duke Ellington. A believer is an optimist who thinks of tomorrow. Well, Mr. Spock thought of tomorrow.
He was.
Big time. Market-wise, let's take a look at it out here. Dow Industrials finished down 81. NASDAQ off 24. S&P's off 7. Gold contract up $2.60, trading at $1,212 an ounce. Silver flat at $16.62. Platinum up $12 at $1,187 an ounce. Copper $2.71 a pound flat. Light sweet crude up $1.11, $49.27 a barrel. Bonds, the bond market, folks, is phenomenal. Now, what are we doing? The bonds look like they're doing another small ABC structure on the way up. They're going to go after the highs. What you had out here today, you had the 10-year up 5 ticks, 126.14. That's after rejecting the lower price. 30-year up 5 ticks, rejecting lower price at 146.31. And King Dollar just crawled over the high, even on the weekly basis. It was over the high, closed over the high. It was down 36 ticks, closed at 95.30, but that will put it on track to go after the January 26th high of that 95.85 area. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay. So if we start with the SPY, folks, what you're going to see out here is this. The volume, of course, is anemic. And when I say anemic, it's anemic in an extraordinary way. We closed out on the weekly, well, on the daily or the weekly, it doesn't matter what you want. Price-wise, it's the same, of course. It's 210.66. What do we do volume-wise? Well, what we did is this. We did volume of $385 million. And just so you can get your head wrapped around that a bit, that daily volume, that weekly volume is as much as we had on a day, October 15th on the way down. So what does that mean? Well, what you have is this. It's subtle. The high of last week was 211.33. We closed at 210.66. So on a technical basis, that's a failure at a high, price, volume, all of the above. Now, that being said, what the SPY has to get done is it has to come back inside 208.85 in order to be in the lower range. I suspect we're going to see that make a run for it next week. NDX 100, if you take a look at the 3 Qs, the same setup you have in the SPY, we have in the 3 Qs. Specifically, what you have is this. 3 Qs, higher high, dramatically lighter volume, same type of take also. The 3 Qs out here, what the 3 Qs did on a weekly basis, we did 102 million, and October 15th, they did 112 million on the way down. We closed at 108.40, and the high of last week was the 47. So same setup there. The NDX 100 no doubt, though, has been a stronger indice than the SPYs. They're all at highs, but bottom line is that that Index 100 has been stronger. Gold. What do we have with the gold market? What you have with gold is this. Gold is a decent setup, folks. What we've done this week is this. We got out of the downtrend. You know, the downtrend that had started happening, that was happening from January 22nd. That's when gold was at 308. Runs all the way back down to the price point of 1197. We tucked our way. We got outside it. But what we don't have is that wide price spread accelerated volume. And that's when you break trends, that's what you do want to see. You know, so it's going to prove itself next week. That's the bottom line. You know, daily, weekly, they're both set up pretty good. XAU, HUI have the same types of setups, meaning they're nice setups, but you want to see the proof, the proof in the pudding. Bonds. What do we have with the bond market? Now, this is the ever-ready bond market. I mean, it's just actually phenomenal. Bonds, you know, just don't want to go down. They broke topside once again on the 24th, and you talk about wide price spread. The 10-year had 2.4 million contracts. It went from 27 to 28 to 25. So that's setting up. That's going to go into the highs again. You know, you had not all the Fed presidents out here today, but you did have Stanley Fischer, who's the vice chairman, and Dudley, who's the New York Fed president, out there at the New York Forum today. And both of them were basically saying different things. The vice chairman was saying he sees June as a nice place to, you know, basically maybe get, June or September, get an updraft in rates, where Dudley was saying that until our perception is that we are going to see inflation of 2%, he didn't feel there's any need to get rates up at all.
They've got that can. You know which can I'm talking about?
No.
The one you keep kicking down the road? It's like, I'm going to kick it down another 10 feet, and then when I get to it, I'm going to kick it again.
They're scared to death of raising rates. Well, this is what's so bizarre, folks. They're scared to death of raising rates to have the market pull back. It has nothing to do with the rate structure. It has everything to do with what assets are worth on on companies and banks' balance sheets.
There was a great, I'm trying to remember who the gentleman it was. I think it was the guy that used to work for PIMCO.
Okay.
And he said basically the Fed has one option, and that is trying to blow all the volatility out of everything and just have it sit still. They can't really have stocks go any higher because it's a bubble. They can't really have them go any lower, or everybody's going to want to sell at once. So as far as he's concerned, the only play that the Fed has is trying to keep the market and all the volatility out of the market and have people just sit there.
That's
and
pretty
own
intense.
it. And it does kind of seem like a no-win situation for them. If it does go up and they just act like nothing cares, it goes into a bubble. And then we all know what happens when the music quits playing. The other thing is that it starts pulling back and everybody gets nervous and it causes a recession. So they want this market to go sideways. It's Alarian is the guy that said that. So the only real idea that these guys have is, can they just let the market go sideways until the reality of the market at 2% GDP per year catches up with the market?
Yeah,
and
I can see that. I can see that. You know, bottom line is that they're not going to be able to pull it off, because what you do have, and this is the longer that we stay up at these levels, folks. What you do have is that there was a great quote in the Den. You probably saw it the other day. Headline news: market down 0.1%. I'm exaggerating a little. They might have said 0.2%, but it's a great quote one of the traders put in there, because it's that dramatic, folks. Meaning that if the market backs down at all, it seems that people freak out right now because they haven't had a correction in so long.
I've always one of the earliest things I heard was that the market was bipolar. Either things are good, getting better, or they're bad, getting worse. And there's not a whole lot of difference between flipping the switch up and down for the mentality. Everybody runs one way, everybody runs the other. And we've been on a manic high for quite a long time.
Well, I'll tell you that one of the smallest pullbacks I've ever seen that people absolutely panicked was in '94. And '94, folks, okay, it was a decent pullback. It was 12, 15%. But what happened is that it was like the end of the world. And it was like pretty intense. Dave White, Tom O'Brien, You stay right there, folks. We're going to be coming right back and growling a problem with us. We do appreciate you being out there. And stay warm this weekend, folks. Dow is down, finished down 81. NASDAQ off 24. S&P's off 4.5. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us out here. You had the Dow finished down 81, NASDAQ off 24, S&P's off 720. And don't forget, folks, at TFNN, every trading day, you can get all the programming right on your cell phone, TFNN.mobi. Live trading, live programming, rather, from 8 o'clock in the morning to 6 o'clock in the evening. Dave has an outstanding show every trading day, 2 to 3 Eastern Standard Time. Also has a couple great newsletters. Where you get them, go to TFNN, You go to newsletters. You can go to trading newsletter. You get the path of least resistance right there. Test drive it right now. We get a slide up. It's the iWatch rollout. March 9th is already here, man. They're rolling this baby out.
They're rolling it out, and basically they're starting the PR engine right now. I suspect it's to steal a little bit of thunder on what we're going to talk about next, which is the Mobile World rollout conference for cell phones next week.
Yes.
So they don't want to be.
So when you say rollout, I mean it's going to be the launch. This is
It's going to be the launch.
The Apple Watch is going to be out.
They'll say, here's what's going to be. This is what's in it. You can order it today.
Okay.
It'll ship in 7 days. Normally
we're going to know whether it's going to be big or not. Right.
Well, they've only ordered 5 million parts.
Okay.
So they can't sell any more than the parts that they've ordered on it.
And you're saying that they're going to roll it out in women's high-style magazines, I guess, right?
Right. In fact, the magazines.
That'll make sense.
The magazines came out today, but they've got.
Oh, did they?
They bought like 10-page spreads.
Okay.
And they have all the beautiful photography, and they're making it look like a Rolex watch and all the beauty and everything else. It's a little tough to see that square-looking thing.
Yeah.
Compared to a lot of the fine Swiss watches, I think it's okay.
Yeah.
It's much better than all the other people's for the most part.
Okay.
But
how much does it cost? Do you know?
An iWatch?
Yeah.
$350 to $1,200, depending on what you get.
That's not bad.
If you want the gold one.
They might be selling them.
Well,
we'll see whether people wear them. But
you're starting to see a few leaks about features, and some of the features they've been talking about today in the leaks are that you can unlock your car with it. But you can unlock your car with your cell phone, right? So
I don't even have to. I walk up to my car and unlocks.
Yeah, so they've got that too. So some of the stuff in there just hasn't been. I always want to look at a product and look at what they call the use case.
Right.
Why are you going to use it? And to this point, Apple is basically saying this is to notify you of when things happen. Like you get email, like you get messages, check your Facebook thing. But if I have my cell phone in my pocket, it just buzzes and alerts me too.
Well, we're probably not the market for it.
I don't think so. One, I have to put on my glasses to read any of those little tiny things.
Yeah.
So even when I pull out my cell phone, I've got to put my glasses on. And if I was always wearing glasses, it'd be different. But for me, checking everything maybe every 30 minutes or an hour is fine by me. I don't need to be bothered with it incessantly.
Listen, I agree. There's no doubt. I have, do you remember, when I started this whole, gold deal, when gold was only $280 an ounce and $300 an ounce, man.
I remember, because I gave you that. Remember the first day you printed, I gave you the thing from Jesse Livermore to put on your desk?
That's right, the patience thing. Yeah, totally. And I had it, thank God. But what's so funny is that I ended up with some great gold watches. I never wear them. It's not even close. It doesn't make any sense, man.
We've got at least a generation since,
it must be going after young people. We'll find out. So what do we have up next? The World Mobile Conference. We're talking about this. So this is what they're trying to beat them to. Simultaneously get around.
They don't want to. They want to steal some of their thunder. Now, it's also kind of leaked out what Samsung has. Now, Samsung's new phone. We kind of talked a little bit about it. The Galaxy 6. There's some pictures coming out. Normally, these things leak. They leak more in China than they do in Korea.
Yes.
But I've seen some pictures of it. Now, what's probably most interesting is this thing is a Lamborghini now. It's got all the stuff that...
So they're going to have us buy another phone.
The most expensive version of this thing is almost $1,400.
Okay.
Now, there's going to be a little less when the carriers get involved.
That's an upcharge, though, yeah.
But it is. Sure. It's not just an iPhone. It's got massive amounts of memory. It's got an incredibly fast processor.
Yeah.
That's at least a generation ahead of what's in the iPhone today.
Okay.
They've got a camera that they're making some huge claims on, and of course, no one's seen it yet. So they may be.
And when's that supposed to come out?
Well, we're going to see it Tuesday.
Wow.
My guess is you'll see it on CNBC on Monday.
Okay.
But officially, they're going to be showing it there at that Mobile World Congress, along with everybody else's. So LG's phones, all the new versions of it.
So I got to go check my contract.
I tell you what, if you want probably the definitive piece of hardware.
Yeah.
It sounds like it. Now, Apple has made its bones by putting together the best hardware with the best software, kind of a holistic approach, right?
Yeah.
Now, Samsung is really concentrated. They've put almost $10 billion into new factories over the last couple of years.
Okay.
And the new product will have, of course, a new 14-nanometer processor that should sit probably about 70% of the power that the same sized Apple product will. So they're going to have better battery life. It looks like it's going to have all 3D
And
memory.
I get good battery life now. This
Right.
Galaxy 6 has that.
You're 5.
I got 5.
You got
this
the 5.
This has great battery life now.
So they also have 3D memory coming out. So these things are going to have vast. It looks like, you know, instead you could get. When it came out, you could get 8 gigabyte phones, then 16 gigabyte phones, then 32 gigabyte phones. According to them, there's supposed to be a phone out there with 512 gigabytes of storage on a handheld device, and that's not putting in a thumb drive.
I can tell you, folks, I think I've had this about a year now, right?
No, maybe 6 months.
6 months.
Maybe 6 months.
And I watch Tiger TV on it. When I watch you on it, right?
Yeah.
Because Dave has a dynamite backdrop that he made. No, you do. You should. I'll show it to you someday,
Oh, okay.
right?
I've seen it.
It's dynamite. Yeah, I've seen
yeah.
it, but I'm talking about on the phone.
Oh, yeah.
And for some reason, let me ask you something. For some reason, it looks like that on the phones it even becomes clearer than on my TV or on a computer screen.
It can, and there's an issue with scaling.
Okay.
And it's the same issue that you have when you go to the ball game and you look at that giant TV.
Yeah.
Right? There's so many pixels per inch. But it
Okay.
also means, is it an even number where it can be divided easily
Okay.
or multiplied easily? And a lot of times you'll get the original video will be just slightly off a multiple
Yeah.
of the bigger one.
Okay.
And the scaling engine in there has to make, well, I'm going to take this one, I'm going to take that
It
one.
works really well.
And
Look,
that way it
when
looks
I
a
looked
little
at
funky.
It's sharp beyond
Right,
belief.
and
yeah.
if you get a display that's the same as the native, multiple of the native
Okay.
camera that took it,
Right.
then they can look brilliant, right?
Yeah, that's what it brought.
And
So it's
that's-
HD to HD, probably. Yeah, right.
It's
That's
apples
what-
to apples
yeah,
kind of
that's
thing,
what
so it's really not scaling.
So, what else will happen at this? So mobile right now is taking over, really,
It
right?
really is. And what you're going to see is probably a lot of deals. Who knows where they're going to come from?
Yeah.
But people buying other people. You're going to see all the new phones from LG and all the other manufacturers besides Samsung. But to me, it's if you go to one of those shows, it's not about the $100 phone. It's all about the Lamborghini, right? It's not about the Ford Fiesta.
You know, the thing that I still have a hard time with, and I use my phone a lot, like, is that because there's so many icons to really move around, it almost, I do the same thing to get to some icons, which drives me, so it's a waste of time.
You
know
can
what I
get
mean?
another, what they call a launcher,
Yeah.
and that can clean that up.
Oh, I like it. Okay, we're going to find out about that.
Okay.
Dave White, Tom O'Brien, you stay right there, folks. We're coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us out here. Now, the next topic we're going to come to, folks, this has been the topic all week. In fact, TFNN, Dave's been talking about it for a few years now. And it's net neutrality.
Right.
Okay? And you hear them out there screaming and yelling, like this week, about the good, the bad, and the ugly.
I've never heard so much disinformation from all sides as anything on an issue.
Right.
Because apparently everybody, there's not that many people that really understand what's happening under the hood.
Yes.
And it's kind of like this big mystery thing. And the people on both sides horribly lying.
Okay, so net neutrality specifically, what does it mean?
Imagine that you and I both had hamburger places or pie places.
Right.
And I want to ship a pie to the same customer. and we're right across the street from each other, and
Yes.
we're shipping it to L.A.
Okay, good.
Okay. FedEx decides to charge you more than for me to ship the same package to the same spot.
Okay.
And not only that, they're going to slow it down and make sure it takes 3 days instead of 1 day.
Okay, cool.
Okay. It is a company that decides that depending on whether they can put enough pain to you, that you're going to pay up.
No, I get it. So that's why they want to make it a utility, that we all get the same electricity.
We got it.
You got that's awesome, man. Okay, I got it. And so that's perfect.
Now-
Because that's important to really understand for us and for people opening businesses and all of that. Because listening to the arguments up there, it's like, hold it, man. Is this good or bad? Okay?
It's just as
it's
simple
great
as
for the
that.
consumer. That's the bottom line.
It's great for the consumer, but at the same time, the right has been kind of lying about what's going to happen on that side. The left-hand side has been basically pushed by Comcast and Time Warner.
But you know what's so funny? You just said the right and left. This isn't a right and left issue. Right?
To me, it isn't. But there's been more money spent on this than anything else by a factor of 3 in Washington, D.C.
Yeah, that's because they have so much money.
Google is the biggest spender. And they spent more money on this one issue to get net neutrality out because they didn't want to get into this issue.
Regulatory period, right?
Right. They didn't want to have to say, okay, Time Warner, I want you to let my stuff get to my customer without you messing with it, without you slowing it down,
right,
or without you with your hand out saying, I need to have my beak wet.
Right.
You know, I just need a little taste, just a little taste.
Now let me ask you, inside of that, my understanding is that Netflix, they pay to make sure that everything does. Can you pay up to make it better, or does that not happen either?
Now that would be illegal. Now
that's what I wanted to know. Right.
Now there's something that my readers of my Tech Insider will know.
Okay.
And I went through it about 9 months ago. The dirty little secret for Netflix is they've been buying these rack-mounted units that go in to the local office that's just a couple of miles from you, maybe less than 5 miles.
Yeah.
It has every movie that they have. It's updated constantly.
That's so smart.
Okay.
Because now storage is getting so inexpensive, right?
Well, Time Warner and Comcast were yelling at Netflix that they were spending all this time sending all these different movies where if you just provided this box, then all we're talking about is the last mile to the house.
Right.
We don't have to pay big money upstream to stream these movies.
Right.
Well, that lasted until they figured out that Netflix went ahead and did it. So there are these little boxes that literally have somewhere around 2,800 hours worth of movies on each one.
That's wild.
And every one of them gets switched out. But the movie that you stream in 80% of the country is within 5 miles of you. So it's not a big deal. They're not paying long distance things to stream it from California back to New York, right? It's going to be streamed at least from Netflix. Now, as soon as they did that, then basically they came back knocking on Mr. Netflix's door and go, well, here's your rent bill. Well, what do you mean our rent bill? Well, you have these things in our office, so we got to charge you money for rent.
Yeah, right.
And it was a little bit, well, you know, it'd be a real shame if your movies weren't available to be seen tonight. You know, it's the whole shakedown thing. And
so that's Comcast. Listen, that's good.
Comcast and Time Warner and AT&T have been the biggest offenders.
Right, and so their argument has been, of course, we spent all the money to basically lay down the wire and all that, but the bottom line is that
no matter what you do, they want to get on the food chain. They don't like anybody just paying for their bill and getting the service they paid for.
No, for sure.
They've got to wet their beak as it comes along the way.
Inside the slide here, I see you saying that
the bigger issue, I think, that most people
municipal broadband.
Right. I think the bigger issue that people haven't seen this week, and the thing that they're really upset about, is that now your city,
yes,
because of a ruling and a vote they took about 30 minutes before this big net neutrality vote, allows any municipality to set up their own Wi-Fi broadband internet system.
That's huge, right?
It is, because probably not. Because 2 weeks has gone by without some little town deciding they wanted to do it because it's been a pain to get the speed that they want or anything else. And these guys come in and sue them. AT&T, the guys that are supposed to be having that are basically suing all these little hamlets and finding every little problem with the FCC so they can keep them out. And it's been effective. And they did it to Google when Google wanted to go into Austin, Texas. They've done it when little cities have tried to go all over.
So now Google could go into a municipality and say, hey, we'll line you up, right?
They could done that already.
Right.
But the difference is who owns it.
Right.
Right now, the city, basically, AT&T was suing them all if you wanted the municipality itself to own it. So Google could come in.
That's cool.
Or another one. But 80% of the country has two choices or less. 50% of the country only has one choice when it comes to broadband at your house, right?
There's no doubt.
So
did you see on CNBC when they were interviewing one of the guys, and he was explaining Becky? What happened, folks, is that Becky, who's a
Becky
great
Quick,
she's a great interviewer. But what happened is that unfortunately their producers didn't give them ammunition,
right.
And so what happened is that she's asking, well, why is this happening? And the guy answered, she says, because Comcast shut down BitTorrent in 2010. And she said, well, what are you talking about? And that's the last question and answer that they wanted, of course, because that was their parent company.
Yep.
And I says, oh man, the producers didn't do their job.
Again, like I said, there was more disinformation this week than happened. But all these companies have been buying Cisco routers, and the prime feature of these Cisco routers was the ability to turn anything on and off that you didn't like. You don't like streaming movies? Slow it down. You don't like BitTorrent? Turn it off.
What is BitTorrent?
BitTorrent is a way of multiple people sharing one file.
I see.
So let's say that there's a video like the video of this show.
Right.
Okay. Instead of having one big server, you split the thing up into 20 different pieces and have at 20 different houses, everybody handing off just 1/20th of the big file.
Okay.
So split it up, let everybody be out there. Now, if one place fails, there's a backup for that. So there's never a time when all these different servers are down, right? So instead of depending on one, it's many, and it's almost always a way of distributing large files. It's, to tell you the truth, it is used for piracy for movies a great deal.
Okay.
You may have a 4 gigabyte file for a movie that hadn't even made it to the theater yet that's been leaked, and that is a big deal. So they're saying because some people use it illegally, we're going to just turn it off to everybody.
Right.
Well, it'd be the same thing.
And they lost. That was illegal.
Yeah,
right.
It'd be the same thing as saying one person sped in a car, so everybody has to take a horse and buggy.
Right.
Right. It just doesn't work.
With it. Right.
So, I think the bigger thing that they're scared of now is the municipalities are going to look at them and go, why don't I just run it myself and figure out what's going on?
Right.
Now, we both know that Verizon sold all their stuff about a week and a half ago, right?
Smart,
They already knew which way the wind was going to blow.
Right.
What they don't want to be is in a no-growth business with competitors like the city coming along, making sure that their margins don't increase.
They have Fios to such great cable.
A great product.
I know. Amazing.
A great product.
Yeah.
So
that was smart, though. So they're going mobile. So because mobile's going to be the deal, period.
Well, hang on a second.
Yeah.
Because theoretically, I heard you talk about Mark Cuban.
Yeah.
And Mark Cuban, one, is not lily white in this thing. He's got a big deal with AT&T.
Right.
So he's kind of partial to them already.
Okay.
But what is true is that the way they wrote this could be enormously misconstrued in the courts to apply to all kinds of things that no one had any idea at the beginning to be applied to.
And that's the danger of regulation, period.
And Mark Cuban.
But the good news is, I'm glad we got it, because Comcast of the world, the Marbells, they want to croak us.
My assumption is that any Congress coming along in the future, if it is started to be manipulated and used for evil purposes, will probably be amended to make sure that that doesn't happen. So I understand the danger. The bigger danger was having two companies running everything.
Which in fact, with Comcast,
they had 80% of the market, so what do you do?
That's sick. Dave White, Tom O'Brien, you stay right there, folks. We'll come right back. Dow finished down 81, NASDAQ off 24, S&P's off 6.5. I'll be right back, folks.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dave White, Tom O'Brien. We appreciate you growling and prowling with us out here. Okay, so next slide. What are we looking at?
I just wanted to bring up everybody. I was talking about on my show this week. There was a giant, it's the biggest semiconductor conference of the year.
Okay.
And it was out in California this week. It's the Solid State Circuits Conference. And Intel was presenting, and they basically said that after 2016, they're no longer going to be using silicon as the major substrate to be building all the new circuits on. That there's a few things that have to happen to keep Moore's Law up, and part of this is they have to get out of silicon in 2016. So
they're going to use Iditarod, gallium,
arsenide.
Is that one word?
No, it's
three different things?
It's three things.
Okay,
right?
Three different things. Okay.
It's been around for a long time.
Yeah.
But there's a few things that you need to have the silicon doesn't have. One, silicon has too much resistance, and the byproduct of resistance is heat.
Yeah.
Okay, so what you want, the technical term is called electron mobility.
Yeah.
But it is the equivalent of lining all the pool balls up and shooting one and basically all of them going forward.
Right.
Or doing a bunch of bank shots all around the table before it gets to the ball it wants to hit.
Okay.
Right? So electron mobility means you push on one and then instantly on the other end it happens instead of bouncing around for a while.
Right.
And that's basically, that bouncing around is what causes a lot of the heat. So as they go, right now we're at 14 nanometer technology. That means that, we're at about a little more than 1,000th the width of a human hair is what connects everything on those little chips.
Okay.
So we're going to go down about, in 3 years, we're going to be 1/4 of what we're at today. So they're really getting to the point now where there's 2, maybe 3 atoms wide in the coming years. So this stuff has to absolutely be perfect.
So this new stuff will help them, right?
It will. But it won't be Silicon Valley anymore. It'll be indium, gallium, arsenide valley. I'm wondering if they have to rename the whole thing out there.
Google Pro. So check this out, folks. This is really cool to know, okay? Google Earth Pro.
Right. Google Earth Pro. They've had the standard version that you get to use on the websites all the time.
That's right.
But you can
Google Earth. Right.
You can download the Pro version that they have. That they used to charge everybody $400 a year for.
Yep. It's free.
Right. There's 2 reasons for that. One, Apple is starting to work a little bit harder into this marketplace, and they want to basically crush Apple in this part of the market.
Okay.
But a lot of features. I know you're doing a lot of real estate.
Right.
But
I use this all the time.
There's a great deal amount of tools in the Pro version, and it's even higher res.
Right.
So when you get this, it is quite a value. They sold a lot of them, and they've had over 1 billion downloads of the standard version.
Yes.
So it's quite a huge market. I don't know how if they're going to make money elsewhere on it, but like I gave you the example, let's say that you wanted to be looking at a piece of property and you don't know if you want to go look at it.
Right.
You could just do the overhead view, but the tools on it will let you measure everything.
Exactly.
So you can see how big the parking lot, how big the building was.
How many parking spots you can get. No, listen, I love Google.
And all these tools. Anyway,
let's go. Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
I love it when you do that. I actually just got a job right out of college with Bright House in St. Pete.
Oh, cool.
Right next to you guys.
Cool.
Yeah, and so I'm just getting introduced to this whole net neutrality thing. And I guess my question for you guys, the professionals, is how can telecom be treated as a utility when customer service is really the differentiator? Like Bright House has all their techs very local. We know that Frontier buying Verizon, a lot of their at least administrative operations will move to Connecticut. Am I correct?
Most likely.
And so, I don't know if you see what I'm saying, but
the Bright House, the Bright House techs basically subbed out tonight.
Well, not necessarily. Not all of them. A lot of them.
Everyone I've seen in my house is.
We do. I mean, it's true. Night Enterprise does do a lot for us.
Yeah.
But, we have many technicians.
Let me put it this way: the cable providers have done nothing but irritate their customers for years. So if you want to say that any industry has brought it on themselves, whether they deserved it or not, you could make a fairly decent case that they have. So I don't know what I don't know what your deeper question is. Is it somehow?
No, you just got a great job. Listen, we're glad you got a great job.
Right.
I mean, and you're in a business that's not going to go away. That's for sure.
Do you think it's illegal? Is that what you're trying to say?
No, he's talking about customer service. Well, you know, the reality, Nick, inside the customer service aspect of it, is that you can call any of these guys up and no one answers the phone for a long time. All right, the challenge for Bright House versus a FiOS is pretty dramatic. I mean, because I've had both of them. The only reason I don't have FiOS now is because they didn't come over a canal, unfortunately, when they built out right where I live. You know, and I know what the differences are. And so, you know.
Absolutely. But let me ask you this, because Verizon still has a large network of DSL operating.
Listen, I've had, you know, the wide open 10 lines, the DSL lines. We've had everything. So
I have at home an 80 megabit per second up and down download. I don't know if I can get that with any other person. I know I can't get it with Bright House. Yeah. So the only thing that people want is at least some choice and at least some competition, and that has been the hardest thing to get in these markets, and especially Comcast, not the ones we're talking about. Comcast. If you just go on YouTube, how many videos do you see of the customer people just giving them incredibly hard times when they have to cancel and move? And it's like I said, this is there's nobody that's guilt-free in all this, but a lot of people have brought it on.
Actually, you know, hey, listen, we appreciate the call, and that's the bottom line. I'm elated. You got a great job. And listen, the bottom line is you can take a look at all those things and, you know, make them better. That's the way to go with it, man.
Completely.
You know?
Let me ask you this. Is there, and this is kind of an aside, but as far as net neutrality, does that play only into residential, or does that go business
It's everything.
Well?
It's right across the board. Hey, Nick, have a great one and have a safe one. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great weekend, safe weekend. Thanks, Dave. Appreciate it. Go get them, folks. Meow!